Hello, dear connections. A very good afternoon to all of you. Welcome back once again in our GS lecture on GST indirect taxes. If you remember well, just have a quick recap what we have discussed till date. That in our previous classes in our previous lecture we had a discussion with you all regarding uh, goods and service tax, and we have discussed the concept of good and service tax in a very deep manner till date. In the lecture 1 we have discussed all the basic concept of GST, goods and service tax, and we had also discussed the concept of goods and service tax. Before introduction of goods and service tax, what are the major pitfalls for goods and service indirect taxes, why the concept of goods and service tax came into existence. Moving ahead in this direction, subsequently in the lecture 4, we have discussed all the basic elements, basic ABCD of goods and service tax. And in our in the third lecture, in the third video, we had discussed the concept of various types of the median concept of goods and service tax. For example, value of supply, time of supply, what are the composite supply, and place of supply. We had discussed all the necessary important concepts in respect of goods and service tax previously. So I hope that you have enjoyed the previous video, and I'm damn sure, I'm confident that the audience of this video are enjoying my lectures, and I'm also confident that they are getting at least the something about what we're talking in respect of indirect taxes. So I hope that you are enjoying. So in this lecture, in this video, we are going to cover the very important phenomena of goods and service tax procedure. Means how goods and service tax are going to be charged on various types of goods as well as various types of services. So in these lectures, we will be emphasis towards what are the process in respect of goods and service tax, in respect of export and import, and how goods and service tax are charged on different type of supply of goods across the boundary of the state, within the boundary of the state, or out of the boundary of the even the nation, means out of the boundary of the geographical location of the India too. In these lectures we will be going to study all the relevant important aspect. We will be paying attention towards how the goods and service tax across the India is going to be charged on different kinds of goods as well as different types of services. So with the help of examples, we will be going to study all the very relevant concept in respect of procedure for the valuation of goods and service tax. So in this respect, now without further wait, now come on the topic, the procedure of goods and service tax. So if you remember well, in our previous classes, I had told you, in our previous lecture, in our previous presentation, I told you that are the goods and service tax charged on different uh, on different type of product, different types of services. So I told you interstate sales. So in case of a intra-state and interstate, first try to understand its meaning. That what do you mean by interstate supply of goods as well as supply of services? And when we talking about the supply of goods and supply of services, it includes the barter, it includes the sales, it includes the exchange of goods. Means uh, if you remember well, in our previous classes, in our previous lecture, we had discussed all the relevant aspect of supply of goods and services, time of supply, place of supply, and the definition, the legal definition of goods. So over there we have discussed intra-state and interstate. So once again the phenomena came into existence, that what do you mean by interstate sales and intra-state sales. So first we will be going to study the concept of interstate. We will try to understand the meaning of interstate as well as the meaning of intra-state supply. Then we will be going to make it GST treatment, means in what circumstances and how the rate of GST will be applicable. So interstate sales means when a sale or purchase of goods that occasions movement of goods from one state to another state. For 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 instance, if you remember well in our discussion, I told you there, I told you over there when the goods are supplied, means sale or purchase took place between two states, means one state crossed the boundary, geographical boundary of one state and reached that product services to the another state. It is the case of interstate supply of goods, mean interstate sales, and this is governed by section 3 of Central Sales Tax 1956. The transaction must involve the movement of goods across the state boundary, means in case of interstate sales, the movement of goods must be cross, means cross the horizon, the boundary, the geographical boundary of state. For instance, you can take the examples of a goods which is supplied from state of Uttar Pradesh to the state of the Maharashtra or to the state of the Haryana, whatever the case may be. So it will be the case of interstate sales. Sales is completed by the transfer of document of the title during the moment, and when the sales is took place, the goods transfer from supplier to the recipient or the customer. And in respect of these, for the consideration they're going to pay a certain amount which is known as the price for the products. The recipient will be going to pay, the recipient will pay a certain sum of money for that said goods, and that good is known as the sale. So GST, Central Sales Tax, levied by the central government but collected and retained by the originating state. And in case of when we talking about interstate from the perspective of goods and service tax, central goods and service tax. So in case of interstate sales, IGST will be applicable. Integrated goods and service tax. Integrated goods and service tax IGST. It is the combination of central goods and service tax CGST and SGST, state goods and service tax. So in case of interstate sales or interstate transaction, interstate supply of goods, so IGST will be applicable. IGST will be applicable. So from the perspective of GST, in case of interstate sales, CGST plus ISGST will be applicable, and in case of interstate sales, interstate supply of goods, necessary goods move from one state, means movement of goods from one state to another state in a physical form. It will be known as the interstate supply of goods. And from the perspective of GST, so IGST will be applicable, means integrated goods and service tax. With the help of example, we will understand later on the concept of interstate and intra-state supply. So I hope that the matter pertaining to interstate supply is now clear. So you can take the examples if the goods are sold by the dealer in the Maharashtra to a buyer in the Gujarat and goods move from Maharashtra to Gujarat. So it is an interstate sales. What I just right now told you. That in case of interstate sales, goods move from one state to another state, means here in this case from Maharashtra, means the supplier is in the Maharashtra, the dealer is in the Maharashtra, and the buyer is in the state of the Gujarat. So the flow of goods from one state to another state means Maharashtra to the Gujarat. So it will be the examples of the interstate sales. Tax under Central Sales Tax Act, input tax credit is generally is not available for these. 20% on GST form or state VAT value added taxes. So from the perspective of goods and service tax, in case of a interstate sales, interstate supply of goods, IGST will be applicable. Integrated goods and service tax. IGST is the what the combination of state goods and service tax and central goods and service tax. Moving ahead in this direction, another very important concept phenomena in regards with goods and service tax is the intra-state sales. Now try to understand what does it means intra-state sales or intra-state supply intra-state supply of goods and services in case of a intra-state. A sales of goods within the state means within the state geographical boundary of the state. Once a good flow from one district to another district means within the geographical location of the same state, it will be known as the intra-state sales of goods. It is governed by the state VAT value added taxes before GST or state GST Act under GST regime. So before the introduction of goods and service tax, if you remember well, I told you in previous classes that the concept, the phenomena, the baby of the GST goods and service tax came into existence in 2017. But before that, there are already various types of indirect taxes have already been existed. So in the previous regime means when the regime of VAT value added taxes, right? So in state VAT will be applicable before the GST in case of intra-state, but after the introduction of the GST, what I told you that all kinds of indirect taxes have been totally replaced except few by the Goods and Service Tax Act in 2017. So in case of intra-state sales, the goods move within the state. For instance, in the state of the Uttar Pradesh, the dealer or the supplier of goods supply a goods, the movement of goods by the supplier or by the dealer from the district of Varanasi to the district of Gautam Buddha Nagar, Noida. So it is the examples of the intra-state sales where these two districts fall in the same state. Means Uttar Pradesh, one district is known as the Varanasi and second district is known as the Gautam Buddha Nagar, Noida. So it is both fall under these two districts fall under the one state which is known as the Uttar Pradesh. So intra-state sales will be applicable. It is the examples of the intra-state sales. And in case of intra-state sales, SGST will be applicable when we talking about the taking consideration these aspect from the perspective of goods and service tax. So SGST will be applicable in case of intra-state plus CGST, Central Goods and Service Tax. So generally in case of a intra-state sales, state retained, right? Seller and buyer must be located in the same state. What I just right now told you that in case of Uttar Pradesh, the buyer or the recipient, the consumer also located in the same state. The supplier is also located in the same state, means seller and buyer are located in the same state. Goods do not cross the state boundaries, means if the good cross the boundary of the state, so over there idea it will be the case of interstate. But if it remains, the flow of the movement of goods is remain in the state of with boundary of the state, so it will be known as the intra-state sales. For examples, a dealer in the Uttar Pradesh sells goods to a buyer in Lucknow. It is in the it is an intra-state sales, not interstate sales. From the tax perspective, state VAT or sales tax will be applicable. Both central and state component of tax will be also applicable under GST, CST. CGST means Central Goods and Service Tax plus State Goods and Service Tax, right? So we can go with the real world examples in order to understand the concept of intra-state and interstate supply of goods and or services, whatever the case may be. So it is the in our on our screen a real example of the current aspect of goods and service was given here. It is the in tax invoice, means in this tax invoice whole detail in respect of goods, the supplier, the buyer, the goods, its various number, everything is clearly mentioned. So we are starting from the first, that first who is the supplier, means sold by, in this case Indo Spirit Private Limited is the what, the supplier of the goods. Shipped, it is shipped from Kila number these and these and these, Bilaspur Pataudi Road near Gurugram, Haryana, India 122001. INHR means the supplier, the exact geographical location of the supplier, it is the state of the Haryana, and its GSTIN number is given very well, means GST goods and GSTIN number, which is consist of 15 digits alphanumeric, and the GST stand for goods and service tax identification number. It is the number every registered person who is doing business using e-commerce platform required to get their business registered under GST regime, mandatory as per the act. Other without registration can't work, can't get the license to supply of make the supply of goods and services using different e-commerce platform like Snapdeal, Amazon, Flipkart, Meso, and many more e-commerce platforms are available nowadays. So the order number of this tax invoice is also mentioned. In this tax invoice, you can see every kinds of details, means what type of products, what at what date the goods have been purchased, who is the supplier of the goods, who is the recipient of the goods, and from the where it has been supplied, and what is the rate of GST will be applicable, plus goods, what types of goods have been acquired. So the order number was mentioned like that. Order date, it was in 2020, means in 2020 on 19 November 2020, a order has been placed by Jamal Nasir, which is the postal address, the correspondence address is also mentioned. Ship bill to as well as ship to the same the buyer and well as the consumer, both are the same. So invoice date is also given, first order date and on which date the invoice has been generated. It means on which date documentary evidences has been generated. It means the date of order is the same the date of invoice too. The PAN number is also given of the supplier, not the recipient. Why supplier have given the PAN number? Because at the time of filing the GST, right? So at the time of filing the various types of GSTR as well as and many most documentary evidences, so PAN can be taken from there. CIN number is also given on this tax invoice. CIN stand for Corporate Identification Number, and the buyer details address, postal address is also given along with the contact number. So it is the basic the demographic information of both supplier as well as the recipient of the good is clearly mentioned. Moving ahead in this direction, what type of goods regarding items means total item is order only one item, and the product's title, quantity, gross amount, discount, taxable value, IGST, total, everything is clearly mentioned here. So what type of products have been purchased? Means product handset, FSN number, which is what HSN number, harmonized system of nomenclature. It is all used for the perspective of goods and service tax. Means what is the number of these particular products in the eyes of goods and service tax. So the title of the product was Redmi 9 Mid Black 64 GB, right? A smartphone had been purchased by the consumer, which is here Jamal Qasim, while the supplier is Indo Spirit Private Limited. So Indo Spirit located in the state of the Haryana, while the consumer, the supplier is located, the consumer or the recipient of the good is located in the state of Uttar Pradesh. So one thing is clear that it is the case of inter-state supply of goods, and the goods have been purchased. The name of the goods is given very well. The Redmi 9 Midnight Black 64 GB. IAIMEI serial means serial number is also given on the same mobile. The quantity is also mentioned very well. Means only one smartphone has been ordered. And the most important thing is what goods from the goods and service tax perspective, what type of goods and service tax has been applicable. It is a matter of the questions, it is a matter of the discussion. So you can see here on this tax invoice, IGST is applicable. While just right now I told you in case of an interstate supply, IGST is applicable. IGST stands for Integrated Goods and Service Tax. So the rate of IGST is clearly mentioned, which is 18%. You can see here. The rate of goods and service tax is clearly mentioned. 18% it has been charged. The gross amount means total amount which is which is going to be paid by the recipient of the goods or the customer or the user. Means here 8,299 is required to pay by the recipient of the goods to the supplier in Indo-Speed Private Limited. While on the same transaction, no discount was received. Discount value is total mentioned here as 0. Same way, taxable value is also given, means 7,033.05. You can see on this taxable amount, 18% has been charged as a GST. So IGST 1265 0.95, means more than 1000 GST has been charged on the purchase of this type of product. You can see that how government getting a very good amount as a tax, means GST, on different types of goods, on as well as on different types of services. So you can see here that around more than 1265.95 rupees has been charged as a GST, and IGST is the combination of SGST and CGST. So out of these, means half of these of 1265, half of these goes to state governments and half of these go to central governments. So total customer have to pay 8,299. So I hope that the concept of integrated goods and service tax as well as interstate as well as intra-state sales is now clear. Whatever for the kind information, whatever products or services of any customer are going to get both online, in physical market or in online market, means different platform. So you can get your tax invoice of same type from your order. So you can get all kinds of your tax invoice at the time of the purchase on in the physical market. For example, take the example, if you're planning, if you purchase any goods, you will get a tax invoice, a bill, right? At the time of purchase, at the time of handing over that particular goods by the seller to the recipient of the goods, you are going to get a bill in sometime in digital form, sometime in hard form. So it is what over there you can see what types of goods you have purchased, and on that same product at what rate GST has been applicable. So in the tax invoice you can see the details, every details of the intra-state as well as interstate. So in this tax invoice, you can see all the details of goods and service tax is clearly mentioned. Moving ahead in this direction, so with the help of example, you can see interstate sales as well as intra-state sales of goods as well as services. So moving ahead in this direction, we are moving towards another important concept in case of an export and in case of an import. So say in respect of import and in respect of export, the goods and service tax means central goods and service tax, state goods and service tax, and the necessary act, the required act, given a very clear-cut guidelines in respect of import as well as export procedure. So we are going to, after these interstate and intra-state, we are going to study the concept of sale in the course of imports, means what is the definition of import as well as what about its rules and regulation, right, in respect of import in the eyes of goods and service tax act, means what are necessary guidelines have been issued by the Ministry of Finance, Department of Revenue and Central Board of Indirect Taxes and Custom in respect of sale in the course of import and sales in the course of export. So as per the definition, as per the definition which has been defined here, section 5, section 5 subsection 1, section 5 subsection 2 of CST, Central Sales Tax Act 1956, is sale in the course of import refers to a transaction that occurs after goods have been dispatched from foreign from a foreign location, but before they cross the Indian customs frontier and are cleared from the domestic use. So these type of transaction is commonly known as the high seal sale. As in a common terminology, we know import as export, meaning the common definition of import and export. Import means when the supplier is out of the India in India in Indian context. So the supplier is in the state is in the country of China, is in the country of America, and supplying the goods to the supply to the recipient of the same goods in the country of India. So India is importing goods from China, from Russia, from different countries, from Afghanistan and many more countries. India is what exporting importing goods. So in this case, it is known as the high, sea sale (HSS). So it occurs when the sale or purchase occasions the export of goods out of India, and it must be an integral part of the export, not merely preceding it. For examples, if an Indian exporter sells goods to a foreign buyer and the sale itself causes the goods to move out of India, it is the sale in course of the export. As in the case of import, the supplier of the same goods is out of the India and the recipient of the good is in India. So it will be the case of import of goods. With the help of examples, we can see initial transaction. A company A located in the Mumbai places an order with its supplier in China for a consignment of electronic goods with a CIF cost, insurance and freight value of rupees 10 lakh. So the supplier in the China dispatches the good via ship to the Mumbai port. While the goods are in the transit, means on the high seas, and before they reach to the customs port for clearance, company A find a buyer company B located in the Chennai and decide to sell entire consignment to them for 12 lakh. The company A endorsed the bill of the land, document of the title and other relevant document in favor of company B. The company B as the final and effective import importer files the bill of entry with the custom authority at Mumbai port and pay the applicable basic custom duty BCD and integrated goods and service tax. So in case of an import, the goods are received in India and the supplier is in the supplier is in the China. So China will be known as the exporter of the goods, India will be known as the importer of the goods. So the China company, the name of the company is known as here in this example A, and the supplier is what in the state of the Mumbai. So GST will be applicable after the basic custom duty payments. IGST will be applicable. So with the help of this GST treatment, we can understand much more about uh, concept of sale in case of import from the perspective of GST treatment. So IGST on the total transaction value is collected when the final buyer clears customs. The final buyers pay basic custom duty and IGST in cash at customs. And the IGST paid at the custom can be claimed as an input tax credit by the final buyer, subject to condition. The sales between the Indian companies before custom clearance is not separately taxed under IGST. So, in case of a import of goods, IGST may be applicable as we had already told you. So, from the perspective of GST, IGST on the total transaction value is collected when the final buyer clears the customs. So, the final buyer pay basic custom duty and IGST in cash at the custom. And IGST paid at the custom can be claimed as ITC by the final customer, and the sale between the Indian companies before custom clearance is not separately in the direct or tax under the IGST. So I hope that the concept of import in regard with goods and service tax is now clear. Moving ahead in this direction, we are going to start another important aspect of we are going to look other side of transaction, trade, business as export. The sale of goods and services in the course of the export means how the goods are exported and what is the legal definition of export as per the law, as well as what is the GST treatment. So export of goods, taking goods out of India to a place outside India, aligning with the Custom Act 1962. As per the Custom Act 1962, means a goods is exported from the India, from the geographical boundary of India, maybe Chennai, maybe Mumbai, maybe Delhi, whatever, to the recipient who are reside in other countries, for example, Israel, for example, China, America, and so on and so forth. So the export of services meeting a specific condition, supplier in India, recipient outside India, place of supply outside India. So payment is convertible foreign exchange or authorized rupees, and the parties not being distinct establishment of the same person. So under the GST regime, what had happened? A sale in the course of export is treated as a zero rated supply, which is an important discussion here. In case of export, there will be no GST, while GST is about destination based tax. So goods has been exported from India. No? The supplier is in the other country. So the supplier is in the India, but the recipient of the goods is in other countries. So the tax will be collected by the same person of that government. So in the India, in case of export of goods, there will be no GST charge, meaning no final tax is levied on the exported goods or services themselves, and the exporter can claim a refund of input tax paid. The principle ensures that the goods and services are exported, not taxes, making Indian exporters globally very competitive. Moving ahead, what are the various provisions in respect of export under the goods and service tax regime has been laid down? There are two very basic points need to be understand in respect of provision for export under the goods and service tax regime. The first point, export under a bond or letter of understanding LUT without paying IGST. In this case, the exporter can claim a refund of accumulated ITC input tax credit. I hope that you remember well in a very detailed manner we had discussed in our previous example, the previous lectures, the concept of ITC input tax credit. A detailed guideline was given in our previous lecture. So exporter under a bond or letter of understanding LUT without paying IGST and with paying GST. So in first scenario, the exporter can claim a refund of accumulated input tax credit on the raw materials and input services used in the production of exported goods or services. So the exporter can claim ITC on the various raw material as well as on input services used in the production process of the exported goods or services if without paying IGST. The second point, export by paying integrated GST, IGST, integrated goods and service tax, and then claiming refund. First, without paying IGST, the Central Goods and Services have clearly laid down the provision in respect of export of goods under the GST. So, if the exporter is applying for ITC without paying, and if in case of pay, with paying means export by the paying integrated goods and service tax IGST and then claiming a refund of the same after the goods have been exported. So for the export of the goods, the shipping bill itself is considered as deemed application for the refund of IGST paid. Once the export manifest or report is filed with the customs. So it is the provision in respect of export of goods under the GST regime was given. So here are few specific and cases. Few case studies have been mentioned. Transfer of document during the transits. If ownership of the goods is transferred while the goods are in movement, it is treated as the interstate sales as per section C, as per section 3 of subsection B. So ownership final good is still in the transit, means on the way, means the receiver, the recipient of the goods still not received the goods. So it will be the case of interstate sales. And second is the stock transfer or the branch transfer. If the goods move between the branch of the same entity, not a sale, there is no transfer of ownership. For example, in the Lucknow, there are different malls, the shopping malls of different brands, of different entity. For example, we might have different branches at different locations. So if any kinds of goods has been transferred from main branch to other branch, so it will be not treated as the sale and no concept of GST will be applicable as well as there will no transfer of the ownership. So it will be out of this. Third, it must be supported by Form F to claim exemption from central state tax. Third point, high C sales. As just right now we have discussed the concept of high C sales. Sale of goods while they are still on the high seas before custom clearance means still goods are on the sea. So it will be high C sales. Sale of goods while they are still on the high sea sales. It is treated as a sale in course of the import, hence exempt from the sales tax or GST. State, it was a very famous case. The name of the case was State of Travancore Cochin versus Samuga Vilas Casing Nut Factory 1954 clarified that only sales which are integrated to import export qualify for the exemption. It is some basic few specific issues and case studies was mentioned here. Moving ahead, since directions in the same flow, in the same domain, on the same line, another very important perspective, very important concept in respect of these export and import procedures. Taxability of inter-branch transfer of goods means inter-branch. No intra-branch. No means inter-branch. So movement of goods. First, try to understand its meaning. Means it means goods are moved from one branch or depot to the another belonging to the same legal entity in different state. So not treated as the sale under the CST provided Form F is produced. So in the absence of form, it may be treated as the interstate sale and taxed accordingly. So in case of an interstate, it will be not treated as a sale. And when it is not treated as a sale, so no concept of the GST will be applicable because it is the goods which have been transferred from one state to another state in the same legal entity, and it is not part of the sale. Why? Because business have different there are different types of business are there, and have a lot of branches across the world, across the India. For example, we can take the examples of banking sector. State Bank of India, it's having lot of branches across the world, regional branches, rural branches, as well as head office. Or we can take the examples of shopping mall, for example Vishal Mega Mart, VMart. So VMart have one regional branches, have many regional branches, have many rural branches, have many urban branches, have many city branches, having have one headquarters. So whatever the goods has been flow, has been transferred, has been moved from one branch to another branch of the same legal entity in the different state, so it will be not known as the interstate sale because this is not treated as a sale. It is a what? Transfer of goods, not the transfer of ownership, because there are no considerations has been received against of the same goods. So for the same means inter branch transaction transfer of goods. Form F is required for the proof of stock transfer, means goods transfer, note delivery challan, as well as stock register entry. So documentation purposes, these are the various documents required, and it is not treated as the sales. So it is when it is not treated as the sales, it will be not said that it is the supply of goods, and it will be the out of the preview of Goods and Service Tax Act. Moving ahead in this direction, another very important and relevant concept aspect of the GST is consignment tax. Now try to understand its meaning, as well as with the help of example we will be going to explore much more on the same topic, means consignment tax. What is tax? Means consignment tax. So when a tax is levied on the transfer of goods to agents, means consignment agent, for sale on the behalf of the principal, it will be said the consignment tax. Ownership remains with the principal here. It is not the sale. Means on the behalf of the principal, agent sub transfer the goods, so it will be known as the consignment tax because ownership remains in the hands of the principal until and unless it is going to transfer to the ultimate customer. So under CST, Central Sales Tax Act, Form F must be filled to claim exemption. For an examples, with the help of example, we can understand much more about the consignment tax. A manufacturer in the state of in the UT Delhi send goods to his consignment agent in the Punjab for sale. Not a sale, but a consignment transfer. It is not a sale, but it is the consignment transfer. Means if manufacturer have sent a goods which is located in the Union Territory, means Delhi, to his consignment agent located in the state of the Punjab. So it is not treated as sale because no transfer of ownership is there, and ownership remains in the hands of manufacturers, which is here Delhi. So it is not as the case of supply of goods, but a consignment transfer. So how these sales tax works contract, right? So a work contract involves both supply of goods and provision of services. For example, construction, fabrications, repairs, and many more. In respect of these, Sales tax could not levy on works contract as they were the composite contract. And after 46 constitutional amendments, Article 366 sub 292 29A, the transfer of the property in goods involved in execution of works contract became taxable. For example, a builder constructing a house supplies cement, bricks, and other materials. So the value of material is subject to sales tax, value added tax, and GST. So it is the what sales tax on work contract. So if you remember well, I told you in our previous classes that before the introduction of goods and service tax regime, when it came to existence, we had already means India had already the concept of tax which is known as the indirect tax. So sales tax, VAT, value added taxes is also the part of the same, right? So if a builder constructing a house and supplies cement, bricks, and other material, the value of the material is subject to sales tax, value added taxes. How the levy and collection of sales tax. So, imposed under the authority of CST, Central Sales Tax Act, for interstate, what I told you, that in case of a interstate, IGST will be applicable, and in case of a intra-state, state GST will be applicable. So, the phenomena of VAT has been replaced, right? State VAT, the state value added taxes, and central sales tax act. So the taxable event is the sale of the purchase of the goods. And how it is going to collect? It is collected by the dealer at the time of sale by from the recipient, and it is remitted to the respective state government treasury, state of maybe state of Maharashtra, maybe the state of Punjab, maybe the state of Haryana, maybe the state of Uttar Pradesh. And under CST, Central Sales Tax Act, the originating state collect and retain the tax sent. So this GST is what destination based tax. So under the central sales tax, the originating state collects and retains the taxes. So in align with these central goods and service tax, just right now we have discussed all the very relevant important aspect in respect of goods and service tax. So for any kinds of offenses, there are the penalties there. For any kinds of ultra wire of the rules and regulations, there are certain penalties for the same. So here there are certain common offenses: failure to register as a dealer, sometime without registration, if a businessman continues supply of various types of goods as well as services to different states, so it is what offense, and it required to pay make a penalty for the same. Sometimes it leads to major penalty, sometimes it leads to minor penalty. So failure, some common offenses, but it is not limited. But out of these mentioned offenses, there are still many offenses. So first offense is what? Failure to register as the dealer, failure to maintain proper books of account is also common offenses. But commonly you can see that most of the businessmen are not maintaining the various types of books of account. Even submission of false return or declaration forms, non-payment or late payment of it is the issuance, non-payment or late payment of taxes. And last one is the issuance of fake, false or the fake invoices. It is all are about the common tendencies of the businessman providing all kinds of doing all kinds of offenses. So for the same, we require to pay a very heavy penalty for the same act. So moving ahead in this direction, there are certain penalties, multi penalties, fixed percentage of the tax due, and even sometime prosecution like for willful evasion or fraud, and interest charge for the delayed payments. For if after a lot of reminder, after a lot of calls, unable to businessman not making, not doing the response of the notice is sued, someone is sued. So necessary interest on the same amount which has been charged by the competent authority required to make the payments. So moving ahead in the same line, the same phenomenon, the same presentation, one of the topic we are going to start. This is known as adjudication and appeals, right? So what is adjudication? Like process of determining the tax liability by the assessing authority. So, just like in case of a direct taxation, indirect taxation, here in indirect taxation, like the one of the top authorities that CB Central Board of Indirect Taxes and Customs. There are various types of commissioner, joint commissioner, additional commissioner of the taxes, right? So there are also even assessing officers, AO of different locations at different post at definition assessing officers are there. So the dealer may require to produce books of account and documents, right, for any kinds of mismatch, for any kinds of conflict. So that conflict that conflict can be addressed. So there are certain appeal mechanisms to first appeal to appellate authority or deputy commissioner of goods and service tax or even custom duty, right? Indirect taxes too. So first required to you can go to make a appellate authority or deputy commissioner, right? You can get an application to the deputy commissioner of uh, indirect taxes, right? So second appeal to appellate tribunal and revision by the commissioner of the commercial taxes. Then after these, you can also go for the judicial review, means by you can go judiciary, right, to High Court or Supreme Court on substantial questions of law. So depend on the nature of the business, depend on the nature of the transaction, depend on the nature of fraud, depend on the nature of appeals or adjudication. So the customer a businessman can go different channels, right? So they can approach to commissioner, deputy commissioner, chief commissioner of commercial taxes and so on. So even a businessman can a businesses premises can go to the judiciary. They can take the exact they can take the help of they can take the matters for the review purpose to the High Court or the Supreme Court or on subsequent question for the questions of the law. So, moving ahead in this direction, we have told you regarding various important concepts of goods and service tax. Right. Till date, we have discussed a very important concept of interstate, intrastate, as well as import and export procedure, and many more things. So there are very famous cases in India has been given in respect of various goods and service tax. So the first and most important case of this Tata Iron and Steel Company Limited versus SR Sarkar in 1960, right, which had defined the concept for the interstate sales. So, as I told you in our lecture that interstate sales, right? So we can quote the very famous case of Tata Iron and Steel Company Limited versus SR Sarkar in 1960. So in this case, the final finally held that what is the concept of interstate sales after a lot of hearing by the petitioner as well as the respondents. The court have given a judgment in respect of the definition, the concept of interstate sales. Meanwhile, other very famous case is what State of Travancore Cochin versus Bombay Company Limited. Right. So in 1972, clarified what constitutes sales in the course of export. Though this case based on giving the clarification that what it constitute the sale in export on the course of export. Similarly, another very important concept, third case study which was mentioned, Gainan and Company versus State of the Rajasthan in 1933 upheld the taxability of the worth contract after the 46th Amendment. And last case study is J.K. Khosla and Company versus Deputy Commissioner of the Commercial Tax in 1966 laid down the principle distinguish interstate and intra-state sales. So these are all of the various case studies. I request the audience of these videos to please get a thorough study of the mentioned case here, because these are the very various case studies, and in order to understand much more the concept of goods and service tax, it because it is a very law. So after the various types of various, when we when a student going to get very type of studies case history. So the concept of the various concept in respect of various types of domain, discipline, in respect of a goods and service tax, the things will be much more clear. So I request the audience, the student of these lecture, this video, to make a thorough study on the sense, on the set course, on the set case studies. So now have a quick recap what we have just discussed till date, till now, right? In a very detailed manner. So we have discussed the concept of the procedure of goods and service tax. So type of sale: interstate sales, intra-state sales, sales in course of export, sales in course of import, branch transfer, consignment transfer, one contract. So the governing law for the interstate CST means Central Sales Tax Act. For the intra-state, the governing law is state VAT, and in case of the export, CST Act subsection 5 subsection 1, while in case of import, section 5 subsection 2, while in case of a branch transfer, Central Sales Tax Act section 6A, while in case of a consignment transfer, the governing law is CST Act, and last word contact article 366 29 29A. And when you're talking about the difference between all kinds of phenomena, right? In case of movement of goods in respect of interstate sales between the state in case of interstate, and in case of intra within the state, I told you in case of export India abroad to India, right? So when we're talking about the taxability, so taxable under CST for the case of interstate, and taxable under state VAT, state GST in case of an intra-state. So export is totally exempted and import is also exempted from the taxability. So branch is not known as sales. Consignment is also not known as a sales, but contact taxable on various types of goods components. So I hope that you have enjoyed the video very well. You know, for any kinds of query, confusion, or for any kinds of conflict, for any further more classification is required in respect of procedure for goods and services. You can contact to us on the given numbers, right? Meanwhile, there are some technical, because of some technical glitch, the camera has been stopped working, right? And I was not considered that the camera was stopped working. So I'm sorry. I'm very sorry for the same, because we are not getting video. So last but not least, so based on this whole presentation on the said topic, so I would like to express my sincere gratitude, to the audience, to the student, right, for watching this, for their passionate listening and getting tolerance for us, and I'm also thankful for the Center for Distance and Online Learning of Integrated University for providing me a chance to make a video on the same topic. For any kinds of clarification, questions, or anything else which is not yet clear to you, you may contact to us on the given numbers. So I hope that things is now clear, right? So thank you so much for watching the video. Thank you.